Basically, we're going to go over what happened on the accounts, and we're going to go over the trades again and what I plan on doing and the notes I've taken and just like what I've learned from my trading and like everything I've gone through basically this whole weekend through reviewing to get an X for Twitter and just like studying the charts from other people there and like reviewing and constantly just learning. So again, here we have the 5K account. We lost it trading USD JPY, and if we even pull up that chart on USD JPY, we can go over the trade. So again, here's the lemma of where we wanted it on this right here, this CRT right here. And again, I think I should have waited just for this candle right here for changing the state of delivery. I think that would have been ideal. Even then, you know, probably waiting for that to form, retrace, then we move up higher. Here, I think I could have been a little bit more patient. Even then, though, on this candle, we already closed above it. So, but the market was choppy. Again, the better entry would have been inside of the 1 hour, you know, or the 4 hour daily range. Inside the lower quadrant would be more ideal to be trading. You know, like once we have this 4 hour CRT, the 1 hour bullish BPR, the entry should be right here. That's where the majority of my entry should be. Right here, once we're reaching back down to equilibrium, because majority of the trades I take are near equilibrium, or like the best trades I realized are near equilibrium of the range of the 4 hour range, the 4 hour daily range, the CRT. You know, it just, once we're hitting the 50%, that's where, you know, or equilibrium, that's where we reverse, that's where we have the good trade ideas. Even here we have a 15-minute CRT, but again, this is London or pre-New York. I mean, the advanced CRT, that's another thing I've been realizing, guys, is trading the advanced CRT, not waiting for the third candle to confirm, because again, price is fractal. Price will give you the indication that it's likely to be a high probability one off of these conditions. Once you hit the 50%, you're hitting the, you know, the BPR, you close right here, you know what I'm saying, you know, it's clear. So again, the entry would have been probably just right here using this regular fair value gap to enter off of. Since we have a breaker market structure, we have a breaker form, retrace into 50% of the range, and you hit the daily range, you trade right there, stops down here, aim for that target of the high up here. A nice, basically a 1 to 2 trade idea, boom, right there on the 5-minute. Boom, this is your 3-minute entry right here. You have a 3-minute bullish BPR that forms. But yeah, I realize majority of these trades are more high probability whenever we have a, you know, the equilibrium being met, whenever we're inside of the ideal range of the daily range here, and just using the higher time frame confluences. Here we got chopped up in the chop right here, and we got stopped out multiple times, and then the market moved up higher, which we anticipated from the start. Really like identify what makes the trade high probability. What, of course, we had the buy side imbalance. Of course, we had the order block there holding, pushing us up. Here in this scenario, what could we have done better on the lower time frame, you know, spectrum here, instead of getting chopped up and then waiting, you know, for the market to move up higher? You know, we're using the 3-minute, we're not even near the 5-minute, and again, we did sweep the lows here, and then eventually we started to move up higher. But again, here really just like identifying dealing range, you know, like not taking trades here, even in this dealing range right here, whenever we're inside of the chop, waiting for the ideal areas of the discount to be hit and taking those trades all the way down here. We're taking trades all the way up here, side of the premium side of the zone. Really, like, it just won't be a high probability. So here I think we should have been able to distinguish that, even using the CRTs. I think we should have been able to distinguish that, especially here on the 3-minute. Once we retrace back down, when we form a fair value gap that's inside of the equilibrium slash discount of the range, and we form an inverse, that's a high probability trade idea there. We don't need to be worrying about what the market is going to form after that. But the best trade idea here would have been just simply waiting for this right here, the 50%, the reversal here, trading this right here. It's just nice clean delivery. You probably won't get stopped out on the retracement here. You form 2 CRTs, so one right here, sweep this low right there, and then you sweep this low inside of a key fair value gap. Which one would you want to trade? Probably this one right here, since you already have the order block and the fair value gap formed, and you sweep the low. All right, and something I have been realizing whenever I'm trading is using the 15-minute CRT in the unideal range for like the 1 hour. Again, I was talking about this right now in the trade idea. We should not be trading longs inside of a premium. We should not be shorting in the discount. You know what I'm saying? We should be waiting for the ideal range of the market to reach those higher time frame confluences, reaching the 50%. And then again, another thing too, when I was realizing is whenever we have a 4-hour internal resistance PDA rate hit without a CRT. So if we don't have a CRT and a 4-hour, you know, like PDA rate hit, and we're using the 1 hour, you know, without any of that either, we need that. We need a 1 hour CRT minimum on the 1 hour. You know, we don't have to have we can have an internal resistance array, but it will be more likely to be high probability if we have, you know, just like a 4-hour BISI, but we don't have a 4-hour CRT, but we have a 4-hour BISI, and then on the 1 hour we have a 1 hour CRT. You know, I would prefer that over a, you know, 1 hour buy side imbalance, because then at the end of the day they're going to be overlapping PDA arrays, and just really like the 1 hour PDA array is going to be the same as the 4-hour one. So that's kind of why I just prefer 1 hour CRT to make the trade more high probability here. And then rushing the trade without 15-minute CRT presented. I think, you know, once we have 15-minute CRT, that makes the trade idea more high probability than ever. It's just simply waiting for the ideal time to enter using like the 3-minute, the 1-minute, or like the 5-minute. But majority of the time, you know, once we have 15-minute CRT and we are like inside of a key area on the high time frame, and we're just like distinguishing when the timing will happen, and like we're just like using the 1 hour also on our side, everything just aligns perfectly there. But we need to have more rules to make the system more high probability, so we can have an edge to identify if it's viable when trading. We're only taking the highest quality setups in order for us to win, and not be losing and feeling the feeling of regret by not trading the whole system and following the rules. So that's another thing. I've been reviewing my commonplace book, analyzing, seeing like which system or which models I need to be doing for certain things and all this other stuff. And so whatever that price is fractal, that means every single time frame aligns with one another. So if I want to trade the 30-minute using the 1-minute entries, I can do that. If price is fractal, the 4-hour bias will be aligned perfectly with the 1-minute bias and the entries, but of course you need that 15-minute for confirmation. Again, time frames don't really matter. That's another thing too. You can have these amount of time frames, you can have these certain time frames using these time frames, and you'll still be able to be profitable if you just know how to use price, or if you just know how to use power 3 correctly, and you're able to identify certain confluences, and you know how the market is moving, and you're just able to identify your edge then and there. Then of course price is fractal. You don't need to be using a certain set of time frames. That's another thing I've been realizing whenever I've been on X or Twitter reviewing those trades from other traders. Like we have a 4-hour CRT, we can use the advanced CRT. We don't have to wait for the third candle confirmation to get the best entry, even though it's more ideal, it's more high probability. But if you have like a 4-hour PDRA being hit and you have a 1-hour CRT that's forming, use the advanced CRT. Like it doesn't make sense trying to not use it. Just use it, and then eventually scale down, continue to scale down. But I feel like I have not been as more discretionary as I would want. Also, I feel like I've been more mechanical, waiting for these certain confluences to form. I've not been more mechanical where I use market maker models, power 3, just the ICT concepts as a whole, like to really give me a stronger edge. Order blocks, I've just been really slack, and only thing I really been focusing on mainly is fair value gaps, highs and lows. And I want to start implementing order blocks, breakup blocks, standard deviation targets, and all these other things, like that make the market, like it just gives me a clear bias, and it just adds more to my CRT. Follow the system and use every confluence correctly, we win the trade. Not rushing CRTs or simply using the 2-minute instead of the 3-minute, using 50% to be hit, to then look for high probability trade ideas on the lower time frame. So that's another thing. So again, we reviewed the trade here. I analyzed what I did wrong, what I did right. 4-hour time frame, we should have been trading the 50% here. 1-hour time frame, same thing here. We should have been just waiting for the 50% to be hit, trading near the discount of the range. And then on the 1-hour time frame also, we had a 1-hour bullish breaker form to push us up higher. So the bias was all correct. Simply what 3-minute entry wasn't ideal here. And this is on the 15-minute. The 1-hour is right here. 1-hour we should have been trading down here. The 4-hour we should have been trading down there also. We should have been trying to find entries whenever we're sweeping these lows, moving up higher. That's where we should be finding the entries, right here, whenever we're sweeping the lows, moving up higher, or retracing into these higher time from PDRAs inside of the discount of the range. And whenever we're trading inside of the premium side of the range, taking longs, this is not ideal because the market doesn't move with speed. Usually the market moves with speed whenever you have this right here, CRT form, advanced, boom, the market moves up. Same thing here. You're retracing back into the discount of the range, and you're hitting a higher time from PDRA that's in the higher time from discount of the range, and you sweep the lows and you move up higher. Simple. Yeah, just the best trade ideas form there. And then again here we get chopped up and we realize we're just too late. We're too late. We're trying to catch the move even though it's already happened. That's kind of what also happened. We're trying to rush into a trade idea and it just doesn't work out. Even though we have everything played out, it's just simply using logical standpoints, understanding market conditions, understanding what makes a high probability trade, using dealing ranges, understanding where the best longs, where the best shorts are forming. And just here it just wasn't ideal. We're simply trying to force. And the same thing here on this one. Again, just really the same scenario. You gotta wait for the 50% to be hit, waiting for the dealing ranges to form ideal longs inside of the discount of the range instead of trading inside of the premium. Even though these did work out, even though the bias did work out, I think we should have been a little bit more patient, waiting for the 50% to be hit, sweeping the lows, moving up higher, manipulating. I feel like trying to trade this right here where you manipulate here and you have this started candle form, it isn't ideal. If the market wanted to move, it would have moved already here after we swept the high, we closed below. Or even when we swept the high, we should have not done that. We should have continued higher. And then for the gold trade this week, again, simply rushing the trade idea. So again, on the daily we had this right here form, unable to get past both sides. 4-hour time frame, 4-hour bullish BPR. 1-hour time frame, we had a 1-hour CRT form. Wasn't a bad idea. We were trading inside of the discount on the 15-minute time frame. We had a 15-minute bullish inversion for value up there. We did form CRT here, but it just didn't work out. 3-minute was bearish here, and then eventually on the 3-minute here, you can see we entered, but we got FOMO. This should have been the main entry. Stops to break even as soon as we break above the high, or we sweep the high and then we were unable to come move up higher. We just come back down, break even. Here we entered off a 1-minute inversion, and again we're just trading near the premium side of the range on the 3-minute honestly. So here's your 3-minute range, boom, we're trading all the way up here. We should be trading down here near equilibrium from this low to this high, trading in the fair value gap, moving up higher. Since we didn't have the market presenting what we wanted, that should have been the ideal scenario here, but we just didn't have that. We were forcing entries, we're being impatient. And then on the 15-minute time frame, we did form 15-minute CRT, but this would have been the better CRT since we do eventually start to move up higher. On the 1-minute here, we did have a 1-minute CB which got inverse, but then we also have one up here. On the 2-minute, we have a 2-minute bearish inversion fair value up there that formed right here. You can see it was holding throughout the whole time, pushing us lower, giving us bearish order flow. And even then, we do have this right here, this bearish order block that forms. And you can see here again, we have a 3-minute inversion for rally after a very small one, but it is very, very powerful to push us lower, continue pushing us lower. And we simply just couldn't accept the idea of us moving lower. So that's basically what happened there. And then on the 5-minute here, we formed the 5-minute inversion, and we started to move up higher. Just really identifying the time of when the market is going to move, understanding what makes the condition a high probability one, instead of just simply trying to rush the entries. I feel like that's what we've been doing. We've been trying to rush the entries, trying to catch the move, having FOMO, risking too much. Certain scenarios like that just make me super emotional instead of being logical. And I know what I did wrong in these certain scenarios. You know, here we should have waited for the 15-minute CRT, and then whenever it was formed, we weren't trading inside of a high probability trading zone, because again, we had the 3-minute being bearish. So not even trading, you know, simply waiting for the market to form this CRT here, and then using the 5-minute entry here, or the 3-minute or the 2-minute entry. Again, it doesn't matter where you enter, but as long as you had that form, that would have been more of a high probability trade idea. All these other ones, I already know what I did wrong. You know, I already know what I did wrong. Monday here, not trading in Q, or I mean, not trading ES first, trading in Q. This one, we didn't have any 15-minute CRT. We're just chopping around. Same thing with like the gold one. We're just chopping around. We weren't able to identify when to trade or when to enter the trade. And it's just really the same scenario here. We're just trying to FOMO. We get FOMO. We don't have a clear, you know, market sweeping the lows, forming the inversion clear here, you know. And this just looks a lot more high probability since we're moving lower, formed the CRT into the BISI. 2-minute was clear. Everything else was clear here. We're trading inside of the discount of the range, you know, it's more ideal here. So yeah, beautiful trade idea. We should have been trading that, waiting for the setups to be high probability. So again, what I've been doing really is just I'm trying to backtest, not really backtest, but like review what I could have done better here in the scenario. Again, when I'm reviewing these markets, whenever I'm reviewing other markets, I'm trying to just review my notes, and like I'm just taking notes on X, you know, like I'm on X, I'm screenshotting other people's trades, other people's stuff. You can see that there, taking mine too. And I'm just like reviewing like how, you know, like what made this trade idea a high probability for them, and what made it a, you know, super high probability one. You know, like I'm truly trying to identify what makes it more high probability for them. It could be during time zones, kill zones, I mean, sessions, all this other stuff. And then sometimes it's simply just like higher time frame PD arrays, sweeps, manipulating, having the change in the state of delivery, the breaker form, and they're not even using CRT, and they're still very profitable, you know. So it just really just comes down to how you're viewing the market, when, and even like just knowing when to execute, when not to execute, when, you know, conditions are high probability, when conditions are low probability, you know. And just like having set rules to what makes a condition high probability and like what makes it not high probability, for you to take only the high probability setups. You know, again, I don't plan on not deviating from my strategy or my rules. I plan on continuing to follow them, but just build upon them and refine them, you know. Like that's the main thing, all I'm trying to do right now, just build upon them, refine them, and make them even better than before. So yeah, I'm just trying to become a better trader by using other time frames also, you know. Like, why am I limiting myself to not using the 5-minute? Why am I not limiting myself to using like 12-hour, or just like all these other time frames, you know? Like, why am I just being limited to simply using these time frames, you know? Like, I'm really trying to identify, you know, like, why are you doing that, and just building upon what I have already, you know. Like, there's just like, it's like a certain instance where I know, you know, like I can become profitable, I can do this, I can do that, but it's really just going to take continuing to learn, continuing to experiment, and just grow upon what I already have. As simple as that, you know. Like, I already have certain rules, certain restrictions, you know, like certain strategies I've built upon trading for so long. Now I just need to refine them and continue to get better. And that's basically really it. That's all I plan on doing. Taking more trades, learning from my mistakes, continuing to grow, continuing to analyze, experiment, see what I can do better, use different time frames, build my experience, you know, use everything I've learned so far, combine it all together, implement it, use it all together, and just take advantage, full advantage of the experiences I deal with, and just continuing to grow and learn from it and refine whatever I have and journal, you know. So that's basically really it. Peace.